Is VERTIV Holdings an AI winner? It's trading at $174 at the time of this recording, and it's up 54% year to date. Is there still room for it to run? Is it a great long-term investment? This is what I'm going to cover in this video. I will talk about business model, financials, valuation, and risks. Before I move on, I want to clarify this is not financial advice. I'm not qualified to give financial advice. This is simply my opinion. Please do not buy the stock based on this video. Please do your own due diligence. At the time of this recording, I do not own any shares in VERTIV stock. First, I will talk about the business model. VERTIV provides critical digital infrastructure solutions for data centers, communication networks, and industrial environments. Its offerings include power management, thermal management, integrated rack solutions, and software services. VERTIV, the company earns its revenue from product sales, recurring service contracts, and software subscriptions. Now, VERTIV does have competition like Schneider Electric, Eaton Corporation, Rockwell Automation, and more. Let us now move to the financials. As we already know, I mentioned that VERTIV is trading at $174 with a market cap of $66 billion. For 2025, they're expecting $10 billion in revenue, which is about 25% growth. Now, this is amazing growth. Margins are decent, but not too great. Gross margin is 32%, operating is 17%, and net margin is 12%. This is expected as they operate in a hardware industry with heavy competition. So how much revenue can they make by 2030, which is 5 years out? So in other words, can they continue to grow this fast? Remember, they are expected to grow their revenue by 25% for 2025. VERTIV aim is to make $13 billion in revenue by 2028. This is 12 to 14% growth. Now, remember, it is not possible to grow 25% each year for their size. For 2030, I am estimating they get to 18 billion in revenue, which is almost double from 2025 revenue. This assumes close to 14% growth year over year. Now, I will talk about the stock dilution. Now, their share count is at 388 million for years. So there is no dilution and there is no buyback. So this is good. Their balance sheet is decent, but not too great. Their net debt is 1.7 billion. This is not too good and not too terrible either. Now, this is typical for a hardware company. So the question is, what about the valuation? Before I move on to the valuation, I'm going to ask if you can take a second to smash that like button, subscribe to the channel, and let's continue growing together. Now, for the valuation, I am assuming 18 billion in revenue by 2030. Since their gross margins are decent but not too great, I am estimating 15% net margin, and I think that this is even difficult to achieve. Now, current outstanding shares are about 388 million. I am estimating no dilution and no buyback. Since this is a low margin, highly competitive industry, I cannot assign more than 30 earnings multiple. Based on this, the 2030 stock price would be $208. Based on the current price of $174, this is a gain of 20%. Now, this tells me that the stock does not have good upside in the next 5 years. Now I will talk about the risks. This space has intense competition. There is execution risk, margin pressure, debt load, geopolitical, and macro risks. So we have to keep the risks in mind. As of right now, I will stay away and want to be investing in VERTIV at $174. Don't forget to smash that like button. Let me know your thoughts in the comments and see you in the next video.